In early May, HEX is at 20 cents. A few days ago, HEX is under 4 cents. That's a very painful drop. And we see a lot of people comparing HEX to Luna, which basically went all the way down to zero. So first of all, I do have a relatively sizable allocation to HEX, and perhaps my views are biased, but as I always say, my videos is not to be looked at as investment advice. I just try to share my views with you guys, and if you have some opinion that you'd like to share as well, you are more than welcome to do so down in the comments below. So yes, HEX price dropped painfully since the second half of last year, as did Bitcoin actually, and of course altcoins usually drop more severely at the time when Bitcoin is experiencing a bit of a bear market. HEX does inflate at nearly 3.7% every year, so there is inflation. And as we know from our fiat experience with the fiat money, inflation does destroy the value of that currency, be that fiat or cryptocurrency. But what I like about HEX is that new inflation is only given to those who stake. So it's similar to what's happening in Bitcoin. Bitcoin does inflate, and that new inflation in Bitcoin is also given to a particular set of individuals, those who perform the mining operations. So that newly created Bitcoin is actually given to those who lock their capital expenditures, who lock their capital into large mining farms. You might disagree, but I do see a bit of a similarity in HEX. If you do lock your capital in HEX in the form of a stake, a proportion of the newly issued HEX is going to be paid to you. And I do expect a lot of you to disagree with me. Again, if we zoom out, we see that over the last year, HEX performed terribly bad, going down all the way from half a dollar all the way down to around 4 cents a few days ago, and it's now at around 8 cents. But to be honest, a lot of assets, especially crypto assets, have performed relatively bad over the last year or so. During the same time, Bitcoin, for example, dropped all the way from, say, $64,000 to somewhere around $28,000 or so. That's a drop of 45% or so. That's also quite painful. And I don't think many would compare Bitcoin to Luna. And looking back in history, Bitcoin, just like any other cryptocurrency or a lot of tech companies on the nasdaq, has experienced a lot of volatility on its way from under a dollar up to $65,000. Back in 2013, we see an 80% drop all the way from $260 all the way down to around $50. All the way during 2014, Bitcoin has been dropping from around $1,200 all the way down to around $200. That's another 85% drop. The previous bear market of 2018, when Bitcoin dropped from $20,000 to $3,000, there's another 85% drop. And more recently, the drop from 14,000 down into the pandemic low of 4,000, that's another over 70% drop. Actually, something similar happens in the general stock markets as well, but with an extended time frame. Instead of drops happening over a few months, we see significant bear markets in the general stock market taking place over a couple of years. For example, this .com bubble brought the Nasdaq, we're looking at triple Qs, by again 85% down. There was another noticeable 55% drop in the triple Qs in the Nasdaq during that global financial crisis, also pretty painful. So to zoom out a little bit, we see the .com bubble down from 120 all the way down to 20 into 2007 at around 55, and another drop down to 25. This does look a little like a chart of some sort of a shitcoin. What are the chances that a new high is going to be created? But if again you zoom out, we are at such heights right now on triple Qs that the previous .com bubble is miles below the current levels, even after a more recent correction since late 2021. While this is not an investment advice, if HEX does create a new all-time high sometime into the future due to all of those trillions of dollars being printed due to relatively high inflation pushing everything higher, if that happens, then what would I want to consider right now is whether the fundamentals of HEX or whatever other asset you are looking at, if the fundamentals of such assets are still intact, which I think they are in HEX. The contract hasn't changed over the last year. While if you compare that to Luna, for example, you'll notice that the total supply of Luna has spiked hundreds and hundreds of percent. Yes, HEX is experiencing 3.7% inflation per year right now, but again, looking at the last few years, Bitcoin has been experiencing relatively high inflation as well, and only going into the next few years, this inflation is going to virtually disappear. And even if you disagree with the comparison of HEX versus Bitcoin, we can also have a look at a parallel with the fiat money. In the fiat world, we do experience constant inflation. This is a chart of money supply in front of you. So yes, the value of this asset that is constantly inflating is falling, just as the inflation in dollars is first given to the banksters and is then distributed to the rest of the population. So holding HEX in that case is somewhat similar to having some sort of a connection to the Fed and being among the first in line in receiving this fiat inflation. There is another very important way of looking at fundamentals. Using a well-established PE ratio, as in HEX, you would earn some sort of earnings in the form of newly created HEX. So let's have a look at a scenario. HEX has been dropping over the last many months, unfortunately. Let's say you have been accumulating on the dips. Say your average price of accumulating, say 60,000 HEX is around 10 cents. Let's compare that average price to the earnings and have a look at the PE ratio. So staking, for example, in this scenario, 60,000 HEX, which at the price of 10 cents is a capital expenditure of $6,000, staking that for a standard 1 year, 365 days, would give you 3.3 T shares, which determine the amount of earnings, which determine the amount of interest you receive in HEX. And that payout per T share right now is somewhere around 6.4 HEX per T share. So jumping into our calculations, at an average price of 10 cents, if you stake 60,000 HEX, that's a capital investment of $6,000. Staking that for 1 year, 365 days, generates 3.28 T shares with a daily payout of 6.4 HEX, which accumulates into 7,660 HEX. And let's just assume the price of HEX never moves up from here. In fact, it gradually goes down into 7 cents over the next year. Just a flat line, slightly down from 8 cents right now to 7 cents by the end of your HEX stake 1 year later. So in that case, your earnings would be equal to $536, and compare that to the capital investment of $6,000, gives you a price earnings ratio, a PE ratio of just under 11.2, which is not too bad right now, even with these depressed HEX prices at around 7 cents. Because looking at the history of S&P 500, for example, here's a PE ratio of S&P 500 going all the way back to early 1990s. We see that the best PE ratio for your investment was just above 13 back in 2011. So the current PE ratio of just over 11 for HEX, with a depressed price of 7 cents per HEX, and assuming that you bought higher at around 10 cents per HEX, is actually still better than any of the PE values on S&P 500 over the last 30 years, going all the way back to early 1990s. But of course, nobody does know the future, and there could be optimistic, realistic, or conservative scenarios. If instead you were purchasing just near the top at 40 cents instead of buying the dips with an average of around 10 cents, then of course the PE ratio is quite bad at nearly 45, where a high ratio means that the earnings that you are getting aren't that attractive compared to a relatively expensive price. But even if you were buying at an average price of 40 cents, if HEX is to give us a bit of a dead cat bounce sometime into next year, once Bitcoin and other cryptos recover, say a dead cat bounce somewhere into 24 cents, that is again a somewhat acceptable PE ratio of over 13. So that's another way of looking at the fundamentals of HEX using the established PE models. And talking about that dead cat bounce, let's see what are the chances of HEX going back to those 24 cents levels. Let's look at Uniswap, or let's look at daily volume, And it does range from several $1,000s all the way up to $50 million. An average, perhaps you'd say, is somewhere around 10 million per day. So once we see some sort of a recovery in HEX, if we see an inflow of buyers and the size of that inflow is only an average size of a daily volume, again $10 million, according to Uniswap right now, that would actually push HEX price all the way up above 24 cents. And the reason for this significant price change from under 8 cents to above 24 cents, that's more than tripling in price, is because of relatively low liquidity. As price has already been depressed, as we probably have already experienced some sort of a pessimism spike, some sort of a bloodbath, if you call it, perhaps there aren't many weak hands left to sell on the market. But of course, we might want to consider both sides of the coin. If this bit of a dead cat bounce in HEX from 4 cents all the way up to 8-9 cents is met with another push lower, especially as Bitcoin might be getting ready for a push down into the cycle low, as the ongoing cycle is now 18 days long, perhaps an attempt to test the 50-day moving average before Bitcoin drops down into the cycle low. So if a correction down in Bitcoin again brings lots of altcoins down and brings a lot of sellers in HEX, so say a sales of another 40 million HEX all in one day might actually bring the price down to 1/16th of a dollar, which is somewhere around 6 cents. So as just a few $1,000,000 can move the price of HEX significantly, let me leave you with this question. Which do you think is more likely? Which will take place first? 20 cents on HEX or 6 cents? Let me know down in the comments below. Have a nice day. Bye bye.